Hey everybody, how you doing? It's your buddy Bruce here, Uncle Bruce from Stock Market Channel, Stock Markets with Bruce on YouTube, my Stock Market channel on YouTube. How you guys doing today? Today's date is May the 11th, 2023, and I want to talk to you about uh, an idea here on how you can pay off a credit card using Tesla as an example to do it. I get asked all the time on my live shows. I do 5 live shows a week, 8:30 every morning Eastern time for 2 hours, Monday to Friday when the market is open. And we talk about the stock market in plain English. And I get asked all kinds of questions about why do you do this? How would you do that? And different examples. And from time to time, I'll talk to a viewer who will say something like, well, I got a credit card bill. And I want to pay it off, or I have a credit card balance and I'd really like to pay it off. How can I do that without dipping into my savings too much? Can I do something with stock options and so on and so forth? And so I thought today I would throw you kind of a real life example on how you can use, for example, Tesla shares, writing calls or writing puts on Tesla to pay off a credit card balance. So here's the scenario. All right, let's take a look at this. Check out this board. It's all high tech. All right, Tesla at the moment, it's midday here on Thursday, May 11th. It's trading around 169 bucks a share, right? So at this price, if you want to buy 100 shares, you need $16,900, all right? Now, I'm going to use an example. I have a viewer who says, I have $15,000 in my brokerage account, and I can't afford to buy the Tesla shares because they're too expensive. They're at $16,900 for 100. I only have 15,000 shares. So I can't buy 100 shares. So I won't be able to write a call option against the stock to bring in extra income. What should I do? Should I borrow money from my broker on margin and borrow the remainder and then write a call option? But then I owe the broker money, and I will get a credit if I write or sell a call option against it, but it won't do me any good because it'll just knock off the balance. What do you think I should do? I say, hey, don't buy the stock at all. No. You like the stock. You like Tesla. You think in the long term, the shares could go higher than here. There's a little bit of downside, but not a lot of downside. There's more upside than downside. Why don't you do this? Why don't you take your 15 grand, utilize it, and put it to work like this? Do a put option right. In other words, create a cash secured put. C, cash secured put, CSP. What you're going to do is you're going to write, or you're going to sell one put contract. Don't mind the writing. It's awful, I know. And it's going to be a $150 strike price contract. And it's going to expire December the 15th, 2023. So this is May. We're talking 7 months from now. And right at the moment, it has been trading around $16.70 to $16.80 per contract. Now, what does this mean in real life and in plain English? Simple. You're going to use $15,000 to write a $150 put contract. That's how much money you have to have in your account to do that. This represents 100 Tesla shares at 150 bucks. But you're going to get a credit in your account for $16.75 down the middle here per share times 100 shares. This means a credit of $1,675 on your account. So you're going to have a credit, big old CR there, a credit of $16.75 in your account. You can take that money out of your account and do whatever you want with it. Do you happen to have a credit card bill that's $1,600 right now? You had to repair your engine in your car, you needed new brakes, or it needed new suspension, or whatever the issue. Something came up, a water heater broke, your dishwasher broke down, and you had to buy those 2 appliances, or whatever the issue is, you need $1,675 or so to knock off your credit card balance. Well, here's the dough. Take it. pay off the credit card balance, and be done with it. People tell me all the time, Bruce, I'm going to get a bonus from work, but I won't get the bonus until the end of the year. It's going to be about $3,000 or so. After tax, it'll be $2,200. And I know I can pay off my credit card bill then, but I don't want to carry the balance right now, because if I carry a balance on my credit card for $1,600 something odd dollars, it's going to run me $33 in interest every month. For the next 7 months, that's $210 in interest that I'm losing. I don't want to pay the interest. How can I knock the card off now and not pay any interest whatsoever? Write this one call for December 15th, 2023, and bring in this money. Now, what's the catch, Bruce? Come on, this is not risk-free, man. You got to tell me what's going on. Here's the catch. All right, here it is. I'm being upfront with you. The Tesla shares are trading at $169 right now. All right. If they go down in value, okay, the further they go down in value, the closer they'll come to the 150 level that you wrote your contract for. When you sold this contract, you pledged to whomever was going to buy it that you would be willing to buy 100 shares of Tesla at $150 a share anytime between today, when you sold the put, until December 15th. So you're on the hook until December 15th to buy 100 shares of Tesla at $150 a share. Now, if the shares trade at $150.01 and up the entire time that this contract is alive, no one is going to make you buy their stock for $150. It's trading at more than $150 on the open market. You're not going to be asked to buy the stock. But let's say the stock was to 142 or 144 or 145. It goes below 150 in 3 months from now. Not even by December, but like in June, July, August, Tesla has a dump. Okay, it can happen. We've seen it before. Likely scenarios. What could it be? The worst case scenario is a contract holder, somebody who holds one of these contracts, is going to go to their stockbroker and say, I want to sell my Tesla shares for $150. I have a contract here. I want $150 for my stock. And the lottery system is in place, and your brokerage firm notifies you, guess what? You have to buy 100 shares of Tesla at $150 a share because they're trading at 145. Well, the $15,000 you need to buy the stock is there. It's right here. You've had the $15,000 there the whole time. So $15,000 comes out of your account at the brokerage firm. Has nothing to do with this, by the way. And this pays for the 100 shares you just bought. So now you're a proud owner of 100 shares of Tesla that are trading at 145 a share. By the way, you're losing money, aren't you? You paid 150 for them, and now they're trading at 145. Here's the good news. You're only down $500 on this transaction. And oh, by the way, have you forgotten? The 1675 you got when you sold the put in the first place? You get to keep that. That's your money now. You're off the hook. There are no more options on your account anymore because this one put you sold has been exercised on you. You own the stock, but you get to keep this. And at the moment, you're what? You're down $500, did I say? Because the stock's $145 a share. You were paid $1,675. You're actually, in a technical way, you're ahead $1,175 right now. But you took this money and paid the credit card. Remember that? It's not in your account, right? Okay. Well, what do you do now? You're sitting here going, Bruce, I got 100 shares at $145 a share. What am I going to do with it? If I sell it at $145 a share, that's what it's trading for. If I sell it, I'm not going to have 15 grand anymore because I had 15,000 savings. I didn't want to touch that. Well, here's the good news. There's always good news. You could turn right around and say, well, you know what? I own 100 shares of Tesla. Why don't I write a call option on Tesla? Why don't I offer my 100 shares that I have for sale to somebody else through the options market? Why don't I write a 6 month out, 7 month out, 8 month out contract on Tesla, a call option, and say to somebody, write maybe a 165, $20 ahead of the market. The market's 145, write a 165 call option. bring in $1,200-$1,500 on that one. That's $1,200-$1,500 coming into your account again, cash, and you're putting your stock up for sale at $165 a share. Now, if it goes to $175, somebody might say, I'm going to buy your stock from you for $165. I'm taking your stock from you. They'll give you $16,500 for your 100 shares that you bought. Oh, and you get to keep the $1,200-$1,500 you already got as well. And now you have way more than $15,000 in your account. But the whole beginning of this entire exercise was, Bruce, I have a credit card balance here, and I'm just trying to pay it off. I don't want to touch my 15 grand. What do you suggest? Now, I just suggest write a put contract, get to the end of the year and take in $1,675, pay off the card. If the shares don't go down, again, this is the other side of the story. You're asking me what's the best and worst case that can happen here. Don't mind me, my little floor thing just moved on. The other side of the story is the shares don't go down in price. They don't go down to $150. They actually stay here. They're at 160, 165, 170, 175. They just hang around these levels. They could go higher, it'd be fine. But if the shares stay at 169, 3 months from now, that would be June, July, August of this year. Your contracts die in December. Okay, there's 4 months left to go. They won't be worth $1,675 each anymore. They'll be trading at about $1,000 each because they're losing time value. As long as the stock stays above 150, these contracts are worthless at the end of their life. If by November the shares are 169, right here where they are now, this contract here will be worth maybe $300. Anytime you want, anytime you feel like it, you can buy back your put contract and you can end this charade. If you decide, hey, they're trading at $300 each, why don't I just buy this thing back for $300? I end up clearing a profit of $1,375. I have 300 lying around. As a matter of fact, I have 15,000 lying around to buy back this. Why don't I just buy these things back, and that'll be the end of it. I'll have 14,700 in the bank. I paid off my credit card for $1,675, saved $200 in interest. Thank you very much. On the other hand, you don't have to do anything. You can just sit back and say, I'm going to let this thing die. I'm not going to buy this put back. Why should I buy this put contract back? The stock's 169. This is a 150 put. Screw this. Let this thing go to zero. I'll keep all of this. Smart traders, the ones that take my courses down here, take my lessons, what they figured out is, no. You know what I'm going to do? I brought in $1,675. And there's like 3 months to go, and then the contract dies. And right now it's trading at $300-$400. It's really gone down. I'm going to buy back this contract that I sold that dies in December. I'm going to buy it back now, and I'm going to turn around and write another put contract. This one is for next year, April, May, further in time. Why do I want to do that? Because I'm prepared to pay $300-$400 to get this contract back. And then I'm going to write another one for $1,675 again. And that means I'm adding to into my hands another $1,200. If I pay $400 to get this thing back and I sell the next one for $1,675, I've added $1,275 into my greedy little hands by September, October, November of this year, just in time for Christmas, and your bonus is coming in. Hello, let Tesla help you pay your bills. This is one put contract. This is on 100 shares. This is the smallest transaction you can make on a put contract for Tesla. If you got 150 grand lying around, or if you happen to have a home equity line of credit and you can get your hands on 150,000 US dollars by borrowing money for 10 years on the equity of your house, which has 300,000, 400,000, 500,000 equity on it, you could write 10 of these instead of one. So you'd write 10 $150 put contracts, excuse me. You would bring in $16,750 in cash against your $150,000 cash balance. Remember, $1,675 against 15 grand, that's like 11%. on your money. It's 11% of this value. So it's 11% of 150,000 or 15,000 or 30,000 or 45,000, whatever amount you want to do this with. The key here is, how comfortable are you with this strategy? Do you feel that this Tesla shares will not likely go below 150 because they're at 169 right now? If you're a believer in the stock, that's the way you go. If you happen to get the stock at 150, don't forget this. For those of you who don't spend this money, the $16.75, you keep it in your account, okay? You're not actually paying $150 for the stock. You're actually paying $150 less $16.75 for this stock, because you were paid $16.75 a share to offer and write the contract. That's the premium you collected. So reality is, you take $16.75 off of $150, we're down to $133.25. That's what you're buying the Tesla stock for. That's the beauty of a cash secured put. So if it is trading at 145, but you paid 133 for it, you're still up on the transaction. You could literally sell the stock at 145 right now, walk out, keep this money right here, and you've got $16.75 plus $145 for each share in your account. And that's $161. That's $16,100. You started with how much? $15,000. You've made $1,100 in profit, even though you got assigned. You started with 15 grand. You didn't own the stock. You have 16,100. You don't own the stock, but you made money on the put contract right down here. This is the beauty of writing cash secured puts. And like I said, if you have a bill that needs to be paid, you got a $3,000 credit card bill that's, is coming up, and you have $30,000 available to you through a quick loan arrangement, rearranging of your assets. Put 30 grand into your account, write 2 of these, bring in $3,350 cash, pay off that credit card in full or whatever you owe 3 grand on. And between now and December 15th, 2023, you could very well buy this back for nothing. You could buy these back for a couple $100 a piece, or don't buy them back at all and take all the cash, and then write another put contract. Hello, nice little deal. If you want to learn more about how options work, call options, put options, how the mentality of the market works in the options market, it's very complicated, but also rather simple. There are 15 lessons available on my website, stockmarkerswithbruce.ca. See it going across right there? You can go there anytime you want. If you go to that website, you'll find this photo right here. You'll see this mug of me. And if you click on where it says classes up on the top right there, you'll come to my Attention Students page. And here we go. Class number 1, how to buy call and put options. Class number 2, how to write call and put options. This is 101, kids. This is your college course in plain English. Lessons 3 and 4, using aggressive tactics to write options. Lessons 5 and 6, common mistakes investors make. Here's 7 and 8, earning income from writing put contracts. Hello, what were we just talking about? Writing put contracts. How to trade call and put butterfly options. How to, using poor man covered call writing strategies to quit your day job. It goes on and on, offering stink bids and stink offers to make more money, and of course, advanced poor man covered call strategies. 15 classes are available now. There'll be more coming. You can buy one class, any class you want, anytime you want, watches as many times as you want to watch it, and away you go. You can watch them all, watch one of them. It doesn't matter. It's up to you. You make the investment in yourself to learn how options work and understand what I just talked to you about here and more. Join me every day, Monday to Friday at 8:30 in the morning, Eastern Time. I'm live every day the market is on. And if you become a member of my channel, you become a Gold Bagel member of my channel. We love bagels. Become a Gold Bagel member of my channel. You can join me for every day 2 shows, 8 o'clock in the morning for the pre-show, the alert show for Gold Bagel members only, and 8:30 for everyone, when everyone can join us. at 8:30 until 10:30, Monday through Friday. You'll learn all about options, and you'll be watching commentary over here somewhere. You will see commentary from all of the members of the channel that have become option writers. And now you're hanging out with option writers who are comparing notes all the time. And it's a pretty good crowd, and we do have a good time with it. Anyway, you're welcome to join anytime you like. Come on in for free and just watch the show every morning at 8:30. Hang out, and you'll quickly figure out how options work and how they might work for you. Whether you're trying to add to your retirement account, whether you're just trying to raise additional capital for bills like credit card bills or other bills, or whether you want to quit your day job and you've decided, you know what, I've had enough of this boss and this company and these people I work with. I want to be on my own. I don't want to ever have to be reliant on a firm ever again to survive. I can write 10 of these contracts. I happen to have 150 grand in my IRA or equity in my home or other investments I already have. I can consolidate those together. I could do what he was just talking about. I could do 10 of these at 150 grand on deposit, write 10 contracts, and bring in $16,750 in cash. And over the next 7 months, enjoy that money. That's over $2,000 a month coming to you. It's not like you can live off it, but it is a big dent in the overheads. Join me Monday to Friday and check out the classes. We'll show you how you can make a living writing options full time. Thank you for joining me today on this channel. Appreciate it very much. If it really works out for you, you'll be able to upgrade your wardrobe one day. You'll be looking snazzy like me, walking down the street, knowing what it's like to be a winner, or hang out with your Jennifer Aniston lookalike wife, like my Jennifer Aniston lookalike wife, and look pretty darn swanky out there, learning how to write, call, and put options. Thanks for joining me today. Love seeing you guys. Come on and see us Monday to Friday on Stock Markets with Bruce. Take care, everybody. Bye for now.